Our focus in this chat is all about what makes a startup investment ready. How do we know? What are we looking for? What are the signs? So I'd like to start with looking at what's the single biggest difference between a business that's profitable and sustainable versus one that's truly needing venture funds?
I mean, I think that one of the hallmarks of a venture-backable company is one that has the potential and the desire to hyperscale. And that's part of our job as investors, is to feed them capital, so put that fuel on their fire that helps them grow exponentially. There are lots of amazing businesses out there that you mentioned that are profitable from day one or early on, and those are great businesses, but that's not what venture capital is. So venture-backable companies have a very unique attribute. Usually they're able to scale exponentially using technology, and capital is their food. So we put capital in, and we watch those companies grow.
I think the other aspect to add to that is when we say venture backable, we imply that the option is at our discretion to invest in these companies. It's also whether or not the founder wants to go on the VC journey as well, because there are fantastic SME companies that maybe the founder may be very happy to continue on the road that they're currently on, which is very different to what, starting the VC clock per se would actually mean for the company. And it is about hyperscale. So I think it's also about whether you as a founder want to start that journey on VC. It's going to be high risk, high reward, high octane, compared to saying a VC, in an SME company, which is still requires incredibly hard work, and could be a very long journey, but it's a very different profile of growth than a VC backed company.
I think there's an element around the capital intensity of the business as well. So there's a general acknowledgement that there's a heavy R&D phase where it's capital intensive. You need to put the effort in, you need to build the product, and then you see the realization with the market. So where a lot of more traditional SMEs, you're trying to find a more linear growth cycle where you're finding a balance between profitability and keeping the company alive versus actually being able to take external capital, really inject that in, build and go through essentially that J curve and then come out on the back of it, hopefully with a high growth trajectory.
I would also say being a VC backable business doesn't necessarily mean that you're not sustainable either.
I think there's also a piece to the puzzle which founders need to acknowledge is how do we get our money back as an investor? And so generally when you look at an SME, you can hold on to that forever. You can have great profitable businesses. You might go through the private equity pathway, but with venture backable, there's a clock to it. And when there's a clock to it, means there needs to be an outcome at the end to return capital to those early investors or even growth investors.
So as investors then prospecting at the early stages, what are those signals or what are you looking for that are going to predict that founder or team can execute at scale?
Well, I think we're never able to predict. That's why our work is high risk but high reward. But we are looking, we have to work backwards from what do we need to believe to be true for this company to return the fund. And so each investment that we're making, we have to believe that it has the potential to be a Canva or an Atlassian. We know that it won't, and statistically, very few of those companies will become successful like that, but we have to believe and have conviction that each one has the potential. And so, there are lots of things that I think each of us look for, and it's stage dependent or thesis dependent, but certainly we're looking for a clear articulation of a problem in a very large and growing market, and the founder has some unfair advantage to be able to be the one that's going to pull this off.
I think, one of the other things that I'd mention as well is one of the biggest and best indicators of a company's ability to be successful in the long term is to be able to attract world-class talent, not just as employees or investors, but also just advisors. And the truly terrific founders at whatever stage they're at are able to rally a group of people around them and charge down towards the vision that they've got.
And when you say vision, can I clarify there, is that showing some kind of, visionary characteristics in their personality? Is it a leadership capability? What's the actual founder X factor that shows that they could grow a team?
There can be charismatic founders, but I don't think that's a precursor or a prerequisite to success. I think it's more having a view of how you think the world is going to look in 5 to 10 years' time, and understanding it's not going to be a clear or direct path, but that you have got a way to shape whatever vessel you are going to sail across the 7 seas to get there and come out the back end.
I've actually been doing a bit of research for our team internally recently around the latest studies on founder characteristics, which are most correlated with success. And it's always hard to know whether these things can be relied upon. Of course they can't, and there are always outliers. But I thought it was interesting that the two characteristics that were most positively correlated with success were adventurousness and extroversion. And the two that were most negatively correlated with success were modesty and anxiety. So I thought that was really interesting. And there was another statistic that, again, there are always outliers. Companies that have 3 or more founders are twice as likely to succeed as companies with a solo founder.
You know, it's interesting to hear about those attributes and what Rohan was saying about the ability to attract talent. I would say that great founders need to be a magnet, and the things they need to magnetize or pull in their force field is amazing talent, so capabilities around themselves, customers, the ability to sell, and those early sales are going to be founder-led, and capital, the ability to get the resources on deck. So I can see those two comments really coming true in the founders that we have backed that are exceptional, have that ability, and whatever those personality traits are, they have that ability to be that magnet.
You talked about size of market. This is a big growth opportunity. How do you assess whether a market is going to be big enough if it doesn't exist yet?
Don't worry about it. It'll work itself out. And you might think I'm being flippant, or you can see you're looking at me for more, but I think if you are a founder and you're building a company in a new market, oftentimes the niches grow over time, and if they're going at a decent clip in 10 years' time, it'll be a decent size.
Disagree a little bit in that I believe, or I should say that at Flying Fox, we are looking to invest where the market size has already been proven because there's been a pain point that hasn't been sufficiently solved yet. So while there might not be a market for that product because that product is new and customers are not yet aware of it, the pain point or the problem to be solved is well established. And then we look for what are the tailwinds that are happening, what trends are taking place, what behavioral shifts are happening, what regulatory changes are coming about. That means that I always say, what is impossible today but will be inevitable tomorrow? And then you believe that the market will follow. So I agree, sometimes you don't know what the size of that market is, but there are these leading indicators of there is a real pain point. It is felt by many people. It's extreme enough that they're willing to pay money and the current solutions are insufficient. And then there are all of these things behind it that will make it possible when yesterday it was impossible.
I completely agree. I mean, if there are founders watching, you can do that. You don't need to worry about the market size because that'll take care of itself.
So at what point does a startup then, they might have a big bold vision and there's a big opportunity, but at what point, how are you determining whether it's too early, what more do you need to see, or whether they are investment ready?
I was thinking about this earlier. I think one of the key factors that really distinguishes great entrepreneurs from okay entrepreneurs is how far great entrepreneurs can go with no capital. And oftentimes when you're speaking to an early stage founder who wants to raise capital, they're not quite aware of just how much more progress they could make without needing to raise money, which is in their better interests as well as ours, in order to actually prove the thesis and then go and take the next steps. I think oftentimes it's overlooked. So when a founder's coming to us and there are obvious steps to be taken, that they could take the concept further and they haven't taken them, that's a bit of a red flag.
At Flying Fox, we never think it's too early to build relationships. And so that is really important to us, is that we want to meet founders when it's still eye-wateringly early and build that relationship. And then it's our job to stay close to her or him and say, hey, listen, when X, Y, and Z happen, so when we're starting to see these bright spots of customer attraction or customer love, or the product is actually doing what it's saying, we want to know about it and we want to be your first check. And then at Flying Fox, we actually have a little mechanism where before we invest other people's money, we invest our own. So off balance sheet, and not a lot of people know this, but Kylie and I make decisions where we place small bets. And that's a way to build those relationships early, get asymmetric information, and so then we know when they're investment ready, and then that's when we bring other people's money alongside ours. So that's both a way that we start early, and then a way where actually we signal and put our money where our mouth is, so that we know when it's ready to get that first big check.
Is that an insight you get through understanding how they behave when they have someone else's dollars in the bank? Or is that just a piece to have a seat at the table so you can have the insight, so you have first information?
It's more the latter, but that's an interesting question because the former is interesting. Usually it's not a material amount of money, but it's enough for them to invest in the product that they needed, or maybe make a hire that they needed just to get that early traction. And it's to have that seat at the table and to show them that we are high conviction on them as founders and that we're in their corner.
There is no amount of DD I think that you can do that is as good as putting in a check early and watching them for 6 to 12 months and then doubling down.
I mean, the reality is most people haven't raised investment before when you're in startup. And so taking someone else's check changes. And I remember running an accelerator where when you put that first 30, 50K check in, the founders completely changed their attributes and how they behave. And they realized that, oh, this is not just ours, but also we need to take more money on the future. And so there's a bit of a journey shift and a behavioural shift we see once you take your first check.
Accountability, having to answer to someone, having to actually front up and justify decision making for the first time.
And hopefully they see what's possible, right? They get excited about, with more capital, what can I do? So some of the questions that we ask founders is, with this money, what would you do? And then one of the questions I was taught to ask at Amazon is, if I gave you 10 times the amount of money, what would you do? If I gave you 100 times, and it's just an exercise to think about how big can you make this? Make sure that they're thinking, really ambitiously. And of course, I can't materialize 10 or 100x the capital, but it's an interesting exercise to see how ambitious they are and how big they can, imagine this to be.
So on the 10x, 100x, 1000x, we've seen AI. We're in that hype now. We're in that bubble. And so what we know is people can do a lot more with a little. And how is this influencing the way you think about how much capital a company needs, given they can 10x themselves or 1000x themselves with some of the new AI capabilities?
Yeah, that's a very tough question, because I think one of the things that we've seen a lot of recently, and I'm interested to get your views as well, is we're seeing a lot of very interesting here and now companies that do not seem to have defensible barriers to entry or some sort of moat over the long term. And traction is not necessarily the proxy that it used to be for defensibility. And so whereas previously you'd have a founder come to you and show steady growth, and that would be a really good way to assess the need in the market, you're seeing some of these companies blow revenue up and then just as quickly blow it down again. And so that can be quite a challenge. But I think that's where, again, in a lot of the interviews we've done recently with founders of AI companies, it has been around what is their vision for the 5 to 10 years, what kind of company do they want to build, what is their view of how the industry is going to evolve, and how can they shape their company to take advantage of that. And I think that's become increasingly important.